Completing your own tax return? Well, don't forget these docs. As a business accountant, my team and I spend all day long helping business owners on their journey. And of course, what we see is quite a few horror stories of people doing their own tax returns and then coming to us and saying, can you help me with this? And we see some common themes. And in this video, I wanted to talk to you about not necessarily common mistakes, although this information really comes from that place. It comes from things we see regularly as mistakes. But also, even if you're dealing with an accountant, I think it's a good idea to have an appreciation of the kind of bits of paperwork that you want to be keeping throughout the year. So that's what this video is going to be about. And at the end of it, you're going to hopefully avoid an HMRC inquiry. Because of course, if you put details in the tax return that are wrong, or if you don't, more often than not, if you don't put some information in that the Revenue and Customs are expecting, then you can end up in a situation where they're going to inquire into that tax return, and that just gets messy and time consuming and very stressful. So hopefully by watching this video, you're going to learn something that means that's not going to be the case for you. So if you enjoy these types of videos, be sure to click the subscribe button below so you get notified whenever we release another one just like it. So what docs do you need? Well, the answer is all of them. But actually, it comes down to a handful of documents for the majority of people. Now, there could be various reasons why you're completing a tax return. Quite often people that are doing it themselves, they could be small property landlords, they could earn over 100,000 and have to have a tax return. There could be lots of reasons why you might have one as an individual, not just a business owner. And of course, on this channel, a lot of the time we are talking to business owners and people that are in business, and nearly all of those will have a tax return to do. So I'm not going to go too much into this video of all the additional pages. So like if you're self-employed, there is a couple of pages you've got to fill in, and there's a lot of work that goes into just the few boxes that actually you need. So behind me here is about 22,000 pages of tax law, and you need to know a varying amount of that to really get the best idea of what figures should go in those self-employed boxes. So as you can imagine, it's probably out of the spectrum of this short video, but just know that you're going to need some receipts and things to back that up if Revenue and Customs ever looked at what you put in those boxes. So there's raft of videos on the channel with regards to what you should keep, how you should keep your records and that kind of stuff, but just know that you should have those if Revenue and Customs come into it, and you need to put your income and your outgoing really for tax purposes on those self-employed pages. There are additional pages on there, so if you're in the HMRC tool, make sure you pick up those self-employed pages. Don't just start bunging the figures on any other box, because again, they're not going to be expecting it in those places, and it does make a difference. But in terms of the most common documents, you're looking at a P60, they call it. So if you're employed, you'll have one of these each year. They come out normally somewhere between April, May, that type of time, depending on how keen and vast your employer's payroll department are, but you'd have those documents to come out. Now, that just says, look, here for taxable purposes is what you've earned in the year, and here's how much tax has been deducted, and that's obviously a critical thing. There's two boxes then that you enter those into the tax return. That's the first one. Now, you can use, a lot of the time, you can use month 12's payslip if you haven't got one of those, because it will show like a year-to-date figure in there, but it is a lot easier, I think, sometimes to make sure for clarity that you've got that P60. And I've seen some pretty big employers, banks included, muck up those P60s and those final pay slips. So I would probably, if I was going to be really keen, do the comparison of month 12 pay slip and the P60, do those figures meet? And if not, it might be worth you asking what's going on there. I mean, again, Revenue and Customs have this data, so they're expecting a figure, and you want to make sure that your figure matches. So that's the key one, is your employment P60. Whether you've got a part-time job, whether you've got a full-time job, doesn't matter. You should get one. Now, on top of that, if you've got things like medical benefit, or you've got things like company cars, it's quite likely, and I say quite likely because there's a couple of options for the employer here, that you would get a P11D, they call it. And that's just a form that says, look, for tax purposes, this is what you're being taxed on. Now, if you've got a company car that's not electric, I think it's a really good one to look at and start crying and think, is there a better way of doing this? Because you'll notice, like if you have a BMW or something like that of any sort of age, it could be 12, 13 grand's worth of taxable benefit you're paying on that car to have it. So it can be really quite tax inefficient, but it's probably another video. But that document you need. And again, on those employment pages, there's a box for those kind of things. It actually says, medical benefits and cars and fuel and that kind of stuff. And you just literally put those boxes on there. But that's a big one. A lot of people miss that. And the reason they miss it is because they get their P60 early and think, oh, great, I'm going to do my tax return. But P11Ds don't have to normally come to you until around July. So there's this bit of lag. And for employers, they're an absolute nightmare to do. So I don't think anybody rushes them through. But you will have those. So those two docs are key to what you're doing. Now, on top of that, you should be looking for interest. The tax return's not interested in ISA interest, but it's interested in other interest that you might have in normal accounts. What people don't really realise is that as a taxpayer, you don't actually pay tax on your interest for the first 1,000 if you earn under 50k and 500 after that, at the time of recording this video, of course. But they still want it on the tax return just for completion purposes. So make sure you do put it in there. I know the interest rates aren't particularly exciting at the minute, so I doubt there's a lot going on, but you do need to put it on there. So that would be the other one, and you can just put that in the box, whether it's taxed or untaxed. Most of it these days, of course, is going to be untaxed because the bank stopped doing that for a few years ago. But yeah, so you want that, your interest details. You're also going to want to know, if you've got a student loan, you're going to want to know whether it's Plan 1 or Plan 2. And you'll know this from the documents, and also you can, if not, if you get stuck, just Google it, because it's the dates are based on when you studied and things like that. But you're going to want to know that information. That's one key mistake we see, is that someone will submit a tax return forgetting to say yes, they've got a student loan and tick in the box, and then Revenue Customs will instantly send them a big tax bill saying, look, we know you've got a student loan. And sometimes that actually, in our experience, can happen a year or so later, because the student loans company, I think, have a bit of a time lag reporting data. So just bear that in mind. You could get stung later on for a tax bill that you're not expecting just because you didn't tick that box. So student loans, be really, really careful. And the other one is child benefit. So have your child benefit money to hand. So this one's a bit detailed, and again, I probably won't go into it too much in this video, but effectively, if you've got child benefit in the household and one of you earns over 50 grand, you're going to have an issue where you're probably going to have to repay some of it. There's like this staggered effect you have once you start earning over 50k, and the person who earns over that 50k ends up paying some of it back. So there's a box on the tax return to put how much child benefit you've got. So just bear that in mind. Again, if you're under 50k in the house and everything else, it's not going to make any difference, but there is a box for that. So you're going to want your child benefit information to hand. And the other two things I think that are worth talking about is, we've got your P60 from your job, and you've got this P11D, this, if you've got one, this taxable benefit. The other thing that's worth having to hand is, if Revenue and Customs have sent you any tax coding notices throughout the year, they might move things around in your tax code. And actually, one of the cool things about doing a tax return is it doesn't really matter about that, because you're gonna put in, like, into your bucket that is your tax return, all of your information, your taxable stuff and the tax you've paid, and it's gonna chuck out what the proper tax bill will be. So if they've got your code wrong, it's going to be reflected in that tax bill, and you can all sort it out there and then. And that's great, because a lot of people in employment actually have tax debts going on. They're not really understanding they've got these debts and things, but generally it's sorted out in that tax return. However, massive caveat, look for anything that says, tax debt coded into your code or something like that. It's talking about previous underpaid tax. Those kind of words are a big red flag, because there are boxes on the tax return. Again, I can't really go into too much detail on this because it's so specific to your situation. But if you've got that, just know there probably is a box on your tax return that you need to put that into, and it will affect your tax bill. So tax coding notices. And then finally, the other thing that might be quite useful is to look for a pension summary. If you're paying into a pension, private pension pot or a workplace pension pot, keep an eye out for the annual summary. And the reason that is it can give you some clarity around what you should be putting. So if you're a higher rate taxpayer, on certain pension schemes, and again, it's very much dependent on what you're doing and everything else, there might be a benefit to you putting your contributions into those pension schemes on your tax return, and it will actually give you a positive effect on your tax bill. But it very much depends on the actual pension pot. But in order for an accountant to answer that question, and also for your own peace of mind, having that pension summary is quite good, because it shows what you are contributing personally and what your employer is contributing. So quite often there's this thing called a salary sacrifice, where you'd give up some of your money for your employer to pay more contributions to your pension pot. And there is a big difference in taxation between that and you just putting money into a personal pension from the money you've been paid after tax. So not going to go into too much detail, but just know that having that summary is good if there's a question around pensions, either with your accountant or when you're going to do it. And as I say, if this sounds complicated, unfortunately it is. As we said, there's a lot of tax law in place, and whilst you might think your affairs are simple, what always surprises me is actually some of the more simple ones on paper in terms of the quantity. You think, well, there's not much paperwork, can actually be some of the more complicated tax knowledge that's required. So there you go. So there's some of the key documents you need, and some key points and common mistakes that happen in tax returns is those things get missed, the data's wrong, and it does cause a tax bill that comes left field for you. And we've certainly seen some during this January where people have come to us looking for help for that. So that's it. So please do share this video with anybody you think needs to know this information. Like, subscribe, and we'll see you in the next one.